We'll be going over IRS Form 8828, Recapture of a Federal Mortgage Subsidy. Taxpayers won't normally need to file this form unless they've been the beneficiary of a federal subsidy for the purchase of their home. And that type of subsidy can happen in one of two forms. Either you obtain a mortgage loan with lower than market rate interest because it's subsidized by a tax-exempt qualified mortgage bond, or you were able to participate in a mortgage credit certificate program, which allowed you to claim the mortgage interest credit on your tax return. So if neither one of those apply to you, then you don't need to recapture any tax on the sale or disposition of your home, and you don't need to complete this form. So in this situation, we're going to go through this one-page tax form. There are two parts. Part one is when you put in the description of the home, the transaction, the bond or certificate issuer, and then in part two, you'll actually go through the numbers and calculate the recapture tax. So let's start at the top with our hero, John Doe, his social security number, and then the address of the property that he disposed of. Now, when you're completing this tax form, it's going to be the year after you disposed of the property. So when you enter the address, you'll need to enter the address of the property that you disposed of or sold, not your current address as it appears on your tax return. In line two, you'll check either of the boxes that apply to your situation. As I mentioned, John Doe is selling a house for which he had a mortgage credit certificate. And again, if neither box applies, then you don't need to recapture tax. So don't complete the form. In line three, we'll enter the name of the bond or certificate issuer. So in this case, I made up any county housing authority as the mortgage credit certificate issuer. And then the name and the address of the lending institution. So you can put in Anytime Loans, and then the address, which happens to be just down the street from the property that Mr. Doe got out from under. And then the last few lines, we're going to be calculating the amount of time between your closing date and when you actually disposed of the property. So we put in the date of the closing on the original loan, 2019, January 1st. And then we sold the home 3 years later exactly on the day. So in line 7, you'll actually enter the number of years and then full months in between the closing date. So even if we had put, say, January 15th as the closing date, it would still show up as line 7 would still be 3 years and 0 full months. Now, if we entered February 15th, then we would be able to claim credit for 1 full month in that situation. So in line 8, we'll enter the date of full repayment of the loan to include a conventional refinancing. So let's imagine that you obtained the mortgage credit certificate, but you actually repaid the loan sooner. It might happen in a case where you just maintain the home and you refinance, but more times than not, if you're going to sell the home, then the date of the full repayment will probably be the same as the closing date up on line 6. And that's the case in this situation. So now that we've got part 1 completed, we're going to go through this scenario and compute a recapture tax. Now, because some of this information is actually derived from the certificate or the documentation you receive from the issuer, you'll see that I put in some numbers because I don't actually have a mortgage credit certificate to base any of this information on. So we'll walk through this and just understand that the numbers are for illustration purposes only, but you're going to be getting key pieces of this information from either your closing documents or the certificate or the notification that came with your subsidy. So in line 9, we sold the home for $150,000 all in. Line 10, we included expenses, $10,000 of expenses. That's probably actually on the low side, especially since closing costs would be 6% of the sale, and that right there would be $9,000. So, but I just put that in there as a placeholder. You can put in legal fees, advertising costs, sales commissions, things of that nature. And then the amount realized would be, what you do is subtract line 10 from line 9, and you end up with $140,000. Now, when it comes to your adjusted basis of your interest in the home, you may need to refer to the form instructions. You may need to refer to IRS publication 551, which is basis of assets, but most likely the adjusted basis in your home is going to be your share of the cost of the property plus any purchase commissions and improvements minus depreciation. So let's just say that we bought this home for $120,000, including all closing costs. So that would be the adjusted basis. Now, if you rented this out, you might apply depreciation to this, because you're deducting it on your annual tax return. But most likely, it's going to be your basis of the home is going to be your purchase price plus any commissions or closing costs plus any major improvements. So if you installed a new roof, a new air conditioning, if you added a bedroom, all of those improvement costs would increase your basis in the home. So remember, when you're selling property, you want to find legitimate ways to increase your basis or the tax cost of your home so that you lower your capital gains on the sale of your home. So in line 13, we're subtracting line 12 from line 11, and we come up with $20,000 of gain. If this were a loss, you could stop here, attach it to your Form 1040, and you would not owe recapture tax. Since it's not a negative number, we're going to keep going. So we'll multiply line 13 by 50%. We'll enter that number here. Now, I'll kind of lead with, this is the maximum recapture tax that you can expect to pay. So depending on how far you are into the recapture period, it may be lower, it may be zero, but it should not be higher than this. So this would be the maximum tax that John Doe would have to pay on the recapture of his federal subsidy. But let's go down and see if this actually is the tax that he has to pay, period. So in line 15, we're going to enter modified adjusted gross income. Generally speaking, what that is it's going to be line 11 of your tax return. That's your adjusted gross income, plus line 2A of your tax return, which is tax-exempt interest. Combine those together, leave out the sales price, and that is your modified adjusted gross income. So for those of you who may be on Medicare and have to pay IRMA, if you've ever completed a Form SSA 44, the modified adjusted gross income is virtually the same in that situation as it is here. So adjusted qualifying income. This is the first part where you're going to have to obtain information from the written notification that your bond issuer or the lender gave you when you got your mortgage. So basically, there is a table in that notification that lists qualifying income figures, and your qualifying income is found in the column of the table that corresponds to your family size, number of members in your family in the home when you sold it, cross-referenced with the number of full and partial years that you held your home. So, logically speaking, your adjusted qualifying income will go up as you slide further down the scale, either towards the more full and partial years, closer to the end of the recapture period, and then also with more family members, you'll probably have higher qualifying incomes. So I just took a stab and entered in $80,000. Again, this is for illustrative purposes. This is not, if this is vastly different from your tax situation, that's perfectly fine. In line 17, we'll subtract line 16 from line 15. And again, if this is 0 or a negative number, you would stop, attach it to your 1040, and not worry about paying recapture tax. In this case, the amount is $20,000. So we're going to keep going. Income percentage. So if the amount on line 17 is $5,000 or more, enter 100%. Otherwise, you would divide that amount by 5,000 and enter the percentage. So if this were $2,500, this would be 50%. In this case, it's 100%. So the federally subsidized amount should also be found on the notification that you received from the bond issuer or your lender. It's equal to 6.25% of the highest loan amount that was federally subsidized. So just pretending that we took out a $100,000 loan to pay for this, 6.25% would be $6,250. The holding period percentage, again, is derived from that table on the written notification. So there should be holding percentage, period percentages that also correspond to the income or to the qualifying income. So if you fully repaid the loan within 4 years of the closing date and before you sold or disposed of it, you may need to calculate this on a special table that you can find in the form instructions. You can also find that table in our article. So I'll get to that in just a moment. So in this case, I just put in 50%. Again, this is kind of purely for demonstration purposes. You multiply the line 19 amount by this percentage, we get 31.25, and then we're going to multiply this amount by the percentage here, the income percentage. So that's 100%. And now to calculate the actual tax, we're going to take the smaller of this line, line 22, versus the line 14 amount. So if the line 14 amount happens to be smaller than this, like if this was $13,125, then we would be choosing the $10,000 figure up here. As a result, this is $31.25, and you would also include this amount on line 17 of Schedule 2 to report with your Form 1040. Now I'll put links in the show notes to both Schedule 2 plus the tax form that you would have if you were taking the mortgage interest credit deduction, as well as the article here. So we do go into much more depth if you want to learn a little bit more about some of this, the particular details. We go into depth in our article, which you can find on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 8828 in the search bar, and you should see our article appear. If you like our articles, please subscribe to our newsletter. And if you like our videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, please post them in the comments section. Thank you very much and have a great day.